Welcome back to the Undervalued Investor YouTube channel, where today we're exploring SHF Holdings, a company that's been on a tear over the last 6 months, up 80%, and from the August lows is up a whopping 175% for around a $43 million market cap. We're going to derive what is causing this momentum and why it's likely to continue in the future. And if that is a conversation you'd appreciate, as always, hit that like button, because SHF, or Safe Harbor, is a fintech platform with a stellar 9-year track record of facilitating banking and lending services basically to the U.S. cannabis industry, and they've established the gold standard in cannabis banking and lending, leveraging and proprietary fintech platforms. Basically, their leadership and expert position in this undeserved market with extremely high barriers to entry and regulatory oversight, with a national footprint in 41 states, facilitating more than $20 billion in deposit activity to date, with tremendous blue sky through organic growth, commercial lending, and M&A cannabis industry consolidation. Now, I want to just kind of break down why this is just so explosive for this company, as traditional banking doesn't really operate within the cannabis industry, and we'll see that within their earnings. But you can kind of see the U.S. cannabis industry is growing at a pretty dramatic scale, as state by state is slowly starting to regulate and get to the point of legalization. And they got this traditional financial institutions that we know will not back basically cannabis related businesses. It's been a true problem to the industry, and not even just in the US, but in Canada as well. It's something that has been a slow and steady grind, depending on who wants that basically on their balance sheet, right? And they have proven and compliant cannabis finance infrastructure that is leading the way and making this so easy for these companies, as we can kind of just see representing in this little chart. So it's just something to take a deeper look at. But what I really want to focus on is basically the growth and expansion, where they sit with their current balance sheet based off the last earnings. And then it's important to point out that in 2015, they had 153 million in deposits. And today we're talking about like 20 billion, or about 300 million a month. And it's kind of absolutely astounding, with balances on deposit of 220 million versus 13 million. It really shows you what several year differences really made in this industry. And they have a lot of competitive advantages with consistent performance, lending and depository service access, low cost of fund advantages, cannabis expertise with 55 years combined with management, brand recognition. They're established, reliable, and well-performing brand with proprietary scalable fintech and compliance software. Barriers to entry are basically high-risk markets requiring additional compliance that they've dealt with, and they have basically regulatory acceptance, successfully passed 16 federal and state exams with multiple growth opportunities. And taking a look at that growth strategy, they're dealing obviously with a lot of organic book acquisition of client relationship and new commercial lending opportunities. And then they're going to focus on the M&A, current legal markets, and then basically the legalizing markets as well. So a lot of potential for growth opportunities. So let's talk about where they're currently sitting with these earnings, because they announced third quarter and they are absolutely astounding. Revenue increased 82% to 4.3 million compared to 2.4 million in Q3 of 2022, with total deposits increasing 28.7% to 1 billion compared to 836 million in Q3 of 2022. Their monthly average number of accounts held with the financial institution clients increased 49% to 986 compared to 659 back in 2022. And their monthly average balance on deposits held with FI clients increased a whopping 36% to 216 million compared to 158 million again in 2022. The loan book value at the end of Q3 2023 increased 123% to 42.2 million. This has probably been one of the best growth stories that I've currently seen in one of the backdrops of the worst market environments we've seen in a very long time. Revenue increased 121% to 13.1 million. Total deposits increased to 28.7%. Everything about this is astounding. So to simplify it just a little bit more, what we'll do is we'll just kind of read the quote probably from the CEO here, and then I want to look at the balance sheet itself. But the first quarter was another successful quarter for Safe Harbor, as our ongoing execution of our growth strategy led to another period of strong financial and operational results for the overall business. Basically saying that over the past year, since becoming a publicly traded company operating in a highly regulated industry, our focus has been to grow our overall deposit base and increase the size of our loan book while serving cannabis related businesses. As a result of our continued dedication to the industry, coupled with the compliant fintech platform, we have to process more than 1 billion in cannabis related funds for each of our first 3 quarters of 2023. With this increased deposit base, we've also been able to increase our credit portfolio by 123% year over year, basically over 42 million in book value. Since the end of 2022, we have also significantly reduced our overall operating expenses while still being able to grow our business and further increase adjusted EBITDA, which was positive for the third consecutive quarter, concluded Seafried, I'm presuming the chief executive officer here. So again, taking a look at that balance sheet, they also have about $72.3 million of total assets here, with about 8.9 sitting just in cash alone, against about 19 basically million in current liabilities, with a total liability of about 45.3. But again, take a look at this revenue growth here, because this is what is absolutely astounding from that year over year basis that we mentioned. But it's really nice just seeing it in this comprised spreadsheet here. Really helps kind of show this insane growth going on in this industry just over the 9 months, 5.9 to 13 million. Really does show this shifting nature of the cannabis industry. And unfortunately, within the cannabis industry being, heavily competitive, there's a lot going on, from the growing standards to obviously the stores and the sales side. And this company is basically just helping that scale, kind of getting rid of the competitive edge from their aspect of it, and helping these businesses basically grow and expand at a rate where there isn't a lot of competition. So they're not dealing with that same competitive issue, which is just something else to really pay close attention to, because it's going to give them a really big foothold in this industry, which is why we're probably seeing this rapid growth. But these are just my personal opinions of why I think SHF Holdings is going to continue to excel into the future. But I'd love to know what you think in that comment section below.